Hedge funds usually control the majority of money moves in the market. When they're buying, it can move a stock significantly higher. And when they're selling, you guessed it, it can move a stock irrationally lower. As retail investors like you and me, we want to observe what these hedge funds are doing typically on a regular basis, and we want to use that information to our advantage. This doesn't mean that we buy when they buy and sell when they sell, but what we can do is figure out when there's irrationality out there and take advantage of it. Usually when hedge funds are selling, it's because the business is looking to have some short-term issues. This could be because revenue is expected to come in lower now than first initially expected. This could be because profits are now expected to be lower than expected initially. Or it could mean that growth in the company is going to be at 20% instead of 25%. Either way, there's some sort of short-term negativity around that business which causes hedge funds to start selling. Now, after I've done my research on a company, I like to monitor what these hedge funds are doing on a regular basis. And if I notice that they're selling a good business that has good long-term outlooks, strong fundamentals, just because they're going to have some short-term issues, I will take advantage of that. Guys, I did exactly this when Tesla was down at $200 per share back in 2019, and hedge funds all over were staying far away from the stock. Everyone was selling the stock. I understood the future potential of this business and the fact that it was severely undervalued, and I was out there buying. As a result, I've been rewarded greatly with that. I'm up well over 300% on my Tesla position. And what I want to do today is go over 10 stocks that hedge funds are buying right now. And this will kind of give you an idea of what hedge funds are bullish on. So you want to monitor these companies closely. And if there is some short-term weakness, we are most likely going to see these hedge funds sell out of these stocks. It'll probably bring their prices much lower when all that money flows out. But then as a retail investor, we want to take advantage of this if the business fundamentals are still strong. Market crashes like we saw in March 2020 is also something that triggers a lot of selling in these hedge funds, and that's why you even saw these massive giant companies lose a ton of value very quick. But you notice as soon as we started recovering, all that hedge fund money started flowing back in, and these stocks are now, in most cases, making new all-time highs. So take advantage of the irrationality that's out there when hedge funds sell, and you will come out a much more profitable investor. Now guys, quickly, if you like these kind of videos, just drop a like down below to let me know. YouTube, for some reason, is choosing not to push out all of my videos. So if you guys drop a like, share, leave a comment, any of this engagement, it helps the channel out a ton, and I truly do appreciate it. Now this list I originally got from a website called Insider Monkey, and they pretty much compiled this for us and given us some information on like number of hedge funds that hold the stock and how much value is in that stock from hedge funds. I want to share that with you guys today. But just keep in mind that pretty much all of these businesses we're going to look at today are, in my opinion, overvalued. So I'm monitoring them, but I'm not buying at today's prices. But as soon as we see some sort of irrationality, you know what I'll be doing. Also, just remember, I feel like I have to say this. Looking at hedge funds is just one aspect of your analysis. It shouldn't be the only thing you look at and buy into a stock. Of course, the underlying business needs to be fundamentally strong as well, because if it's not, I'm not a buyer. So I'm surprised that Apple wasn't in the top 3 here, but nonetheless, it made the top 10 list. 123 hedgies own this stock, totaling $74.8 billion in value, which is a massive amount of money invested in this company. Year to date, Apple stock has done extremely well, up over 17%, and is one of the big tech giants that has withstood the global issue quite well so far. Now the question is, will this continue? I would say Apple is in the weakest position out of the big 5 tech giants because they directly rely on consumer spending, so we'll have to wait and see how this plays out. Apple is also seen as kind of the main stock that moves the market, so if we see weakness in Apple, you will most likely see weakness in the broader market. Bristol-Myers, this is a company I've never discussed on the channel, but it's a stock that hedge funds are interested in, more so than Apple clearly. 126 hedge funds own this stock for a total of $6.9 billion. Year to date, Bristol-Myers is down close to 10%, so it hasn't been the best performer here, but it's a fairly stable company with a solid 3% dividend yield. Now this is a stock that I actually may spend some more time learning about personally because I don't know much about this company, but it does seem like a very interesting hold. One of the best fintech companies out there, Mastercard, is at number 8. 139 hedge funds hold Mastercard for a total value of $11.9 billion. Year to date, this stock is essentially flat after a volatile run, but you do get a small dividend, which does put you in the green slightly year to date on this investment. Mastercard is a fan favorite not only with hedge funds, but also with retail investors, and for good reason, if I may add, because it's a highly profitable business and has huge growth globally still ahead for it. So now this is interesting because Alphabet has 2 tickers and the GOOG ticker makes number 7. 147 hedge funds own ticker GOOG and the total value is $15.3 billion. Year to date, GOOG is up 5.5%, but you get no dividend with this massive tech giant. Now, Alphabet has always been one of the laggards when it comes to the big 5, and maybe 2020 will be the year it starts really rewarding shareholders for holding the stock with some bigger gains. But at the same time, their business is hurting right now because of advertising and the lack of spending in that space. So we'll have to wait and see how all of this plays out over time. Visa makes the list here and is my personal favorite fintech play. 159 hedge funds hold this stock for a total value of $14.4 billion. Now year to date, Visa is very similar to Mastercard and it's pretty much flat on the year, and it also pays a small dividend as well, so you should be in the green by holding this stock if you bought it at the beginning of this year. Both Visa and Mastercard are great businesses, but I personally like Visa as they are the number 1 player in the space, and because of the growth rate that it still has, it can comfortably maintain this position for the foreseeable future. Okay, so now let's get into our top 5 here. This is where the exciting stuff happens, but there wasn't any screenshots available for this because Insider Monkey actually released this on their YouTube channel, so check that out. But what I will do regardless is summarize that information for you guys. Number 5 is the second ticker for Alphabet, which is GOOGL. According to the data they collected, 167 hedge funds hold this ticker for a total of $11.1 billion. This ticker is up 5.5% as well, just like GOOG, and it has no dividend, as with the majority of other big tech companies. The difference, I believe, correct me if I'm wrong, is that one of these tickers has voting rights where the other doesn't. Number 4 actually surprised me because Alibaba here made the top 5 list, and with all the tensions recently between US and China, it was a little surprising. Nonetheless, hedge funds chase money and 167 of them hold Alibaba with a total value of $19.4 billion. Alibaba is pretty much flat on the year, just up over 1% or so, and again it pays out no dividends like the other tech giants, so your year-to-date performance is essentially flat with this investment. Now we're into the top 3, and of course Facebook has to make an appearance here. 213 hedge funds hold Facebook for a total of $19.6 billion in value. Facebook has recently broken to fresh all-time highs and is up over 12%, and honestly it's about time this cash flowing machine gets some love. The stock has been just way too suppressed in my opinion over the last few years. Facebook will also see their ad business hurt this year similar to Google, but I am optimistic on their long-term future. At number 2 is Microsoft, and this company held the title of most valuable company in the world quite a few times, and it seems to be swapping positions with Apple pretty often for that title. 235 hedge funds hold Microsoft, and total value here is $31.4 billion. Microsoft is up massively for the year, over 20%, and has been one of the sole reasons that the S&P 500 is doing so well. Now, the way I see it, and from my understanding of Microsoft's business, they have not been hurt as bad in this environment, and with their software services and Azure, they're still a very strong, booming business. Now, finally, our number 1 stock here should not come as any surprise, especially if you are someone that follows the stock market. Of course, Amazon took the number 1 spot, and it makes sense, especially in this environment. 251 hedge funds hold this stock for a total value of $32.9 billion. This is also the best performer on the list by far, up over 37% year to date, and has no signs of slowing down as their core business is still benefiting from the global issue. Amazon.com is thriving, and AWS is enjoying all the businesses shifting to cloud, and this has resulted in hedge funds also flooding into the stock to enjoy safety the company currently brings. So there you go, those are the top 10 stocks that hedge funds hold right now, and I will say there were two things that really stood out to me from this list. The first was I was surprised to see the number of hedge funds holding Apple. I would think there'd be a lot more, but at the same time, the dollar value invested in Apple is miles ahead of even Amazon, Microsoft, or any of the other companies, so it's clear where the big money really sits. Apple, of course, is an extremely safe and reliable company, and it makes sense why a lot of hedge funds and investors like you and me choose to put a good amount of capital in this business. The second thing that stood out to me was the fact that Bristol-Myers made this list. There are a lot of other companies I thought would make the top 10, but this company was definitely not one of them, and it's something that intrigues me and I want to spend more time looking into it. This is a $100 billion company with over a 3% dividend yield, so there may be an opportunity here for this as an investment. So guys, as always, this is when I turn it over to you. I want to hear from you in the comment section down below. Were you surprised by any of these top 10 stocks? I'm sure Bristol-Myers caught a lot of you by surprise. Let me also know if you own any of these stocks. I'll tell you personally, I own a majority of the stocks on this list. And who knows, maybe Bristol-Myers will also be added at some point if I find some good value in this business. But either way, guys, if you enjoyed this video, just drop a huge like down below and share this video with a friend as well to help out with the algorithm. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one.